What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi company, and I'm going to explain to you guys exactly why the SoFi stock is down from $18.40 to hitting lows of $13.99. That's about a 24% pullback. And I'm going to show you why investors, institutional investors out there have a sour taste in their mouth and exactly what it comes down to. I mean, there's a lot of companies out there, crashing, AMD, PayPal, Google, a lot of solid companies out there. But I'm going to show you guys exactly why the SoFi stock has crashed, the past week and a half. And it has to do with the numbers, guys, okay? SoFi made this massive claim to be the AWS of fintech 3.5 years ago, when they acquired a company called Galileo and also acquired another company called Technisys. Well, those two, companies costed SoFi over $2 billion. And if you just look at the return over the last 3 years on that $2 billion investment, it has been an absolute, horrible investment as of the last 3 years. A lot of you guys may think of that as short term. I consider it, a moderate to midterm, 3 years. We have not seen the performance that the SoFi management has been projecting. These large clients that we thought we were going to close, these top 10 legacy banks, we started to make the shift to acquire these companies, to the platform 2 years ago. And there has not been, one deal made for top tens. Okay. Now, I'm not saying these deals are not going to close. I'm not saying they aren't close. I'm just saying nothing has happened right now. And SoFi continues to mask the performance of the Galileo technology platform with other segments inside of SoFi that are doing absolutely incredible, financial services specifically. SoFi is continuing to redirect the performance of the Galileo technology platform by announcing, a deal after deal, small deals, little revenue streams that don't come out, a year and a half, and stuff like that. They're just trying to get your eyes off the performance of Galileo, and I don't blame them, okay? And that's another big reason why you're not going to see SoFi communicating with retail investors, unlike other companies like a Palantir and a Robinhood, because those companies are just absolutely dominating every segment of their business. And SoFi still has this massive gray black box of this Galileo technology platform. And if you got videos going out of some of our retail, community that follows this company on YouTube, it might create, some bad press, bad videos, bad headlines, for other deals, investors, and stuff like that if we start to talk about this segment of Galileo. So I gave this segment about 3 years, and Q4, that was the quarter I thought this business was going to accelerate. And guess what, guys? We got the exact opposite. We got a big, fat, zero quarter over quarter. Yes, guys, 0% revenue growth quarter over quarter. And we're going to show you more details inside of that segment, why it's coming to a complete stop, how I feel about it, the numbers. Remember, guys, the Galileo tech platform was supposed to get us the tech hybrid multiple further, getting away from legacy banking, less risk, fee-based revenue, contracts, and the exact opposite is happening. I still believe SoFi is undervalued here, but in the short term, it looks like 2025 could be some headwinds for Galileo on the growth aspect. If you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily. Let's get into the video. All right, guys, and we have breaking news coming out today. If you look really closely, you can see the institutional ownership has finally decreased. Guys, we've been going up for like a year and a half straight, and you can see we finally, topped out right here, and we pulled back in January. It looks like, maybe 1 or 2%. Nothing crazy at all, but you guys can see, it looks like institutional investors did not decide to take this company to the promised land, with some green bars up to here, increasing ownership to 60% or higher. It looks like some of the institutions did sell out, and it's most likely because of Galileo, coming to a complete, quarter over quarter, zero, no growth at all. I do have concerns. I understand these deals are taking longer than expected. These massive players, these top 10 legacy banks are taking forever. Revenue is further delayed, 2026, mid 2025 on some deals. So it just looks like, this segment may not have, a massive growth tailwind for 2025. And, you guys need to be prepared for that, because I'm starting to get prepared now. I still think SoFi is undervalued here because we have other segments inside of SoFi, not Galileo, the member base that is just growing out of this world. The financial service segment is growing faster than, Palantir's entire business, every single segment. I mean, that's not going to slow down. That is what is fueling the growth of SoFi. So guys, I'm telling you, I believe, SoFi is undervalued here, but I just want you guys to be prepared, for a slower growth in Galileo. And that is why I'm making this video for you today, guys, so you can see the full details behind the company, what management is trying to hide from you on this, growth of this company, the numbers, why revenue is coming to a complete stop. And I posted this, this is the tech platform, hot and ready, steaming pile of dookie. And I'm going to show you guys, that's what's happening on the numbers right now. So you'll see headlines like this on the Galileo press release, that came out for earnings. SoFi closes record financial year. I mean, that is absolutely true, with major Galileo partnerships. So you see what they try to do, guys. They try to, take SoFi's massive success, talking about, the lending and also the financial services. And they try to group in Galileo to show that everything is a complete whole. SoFi and Galileo are together, but I'm telling you guys, Galileo is not what is fueling SoFi's massive growth. It is actually holding SoFi back. This is the big, black box, and we're going to cover it for you today. So if you look on SoFi's, investor presentations, you're only going to get, one slide directly correlated to the technology platform, and that basically shows member accounts, member growth. That's it, okay? We have no idea, what revenue streams are coming from what clients. I mean, for all we know, Robinhood and Chime, two of our, top tier clients. I mean, these two companies could probably make up 15% of Galileo's entire business. I mean, if we lose one of them, this could be a, massive red flag. And, SoFi is not going to review the numbers for us because they're not confident in the numbers with the Galileo tech platform, segment mix of clients. So we're not going to see anything. All we're going to see is member accounts. But if you look at this spreadsheet right here, I mean, financial services plus tech platform. You see what they try to do, guys? They always try to combine the tech platform with financial services to cover up the extremely slow growth on tech platform. Once again, I got to show you this, guys, because I thought Q4 we were going to reaccelerate faster growth heading into 2025. We got the exact opposite. We got a complete zero. So you can see financial services plus tech platform, 54% year over year, okay? This baby blue right here is what you want to see. The bigger this goes, this is our fee-based revenue, our tech platform, our financial services, loan platform business. You want to see this go bigger blue. It looks great right here, okay? Absolutely awesome. And then over here on the other side, you can see adjusted net revenue mix, financial services plus tech platform, percentage of adjusted net revenue, guys. And this baby blue right here, the bigger it gets, the better it gets because it's lowering the risk of SoFi out of lending. The blue is the lending. The dark blue is the lending. So this is great, guys. You can see that, overall lending continues to go lower and lower. So our risk becomes less and less. But you have to realize, guys, financial services is doing all of the work, okay? They are putting these two together to cover the underperformance of tech platform, guys. I mean, it is significant underperformance the past 3 years. Q4 was my, final give them a chance, and, they failed miserably, guys. I'm going to show you the numbers, but you guys can see the baby blue, you want to see it get bigger, but it is financial services taking up all of this, increase on this baby blue. So look real closely, guys. You got technology platform right here. We're just going to look at revenue. Look right here, guys. Okay, Q1 we had 94 million. Q2, a small acceleration of a million. We were unhappy then. And then finally, guys, Q3, we got some acceleration once again, $7 million. Once again, guys, right before the Q4 earnings, I was like, man, this is where they finally get Galileo re-accelerating, close some deals, get some revenue streams coming in, guys. And look at this. We got the exact opposite. We got a complete zero. I mean, look at this, 102 million to 102 million. They went up $300,000 in revenue, okay? This Galileo technology platform with, Technisys, the other company they acquired, these two deals costed SoFi $2 billion, okay, 3 years ago. And if you're talking about $2 billion and you're getting 0% growth quarter over quarter, and, that's some huge red flags. Just look at the year over year growth. 2022, 2023, and 2024, we've been stuck in the $300 million range for 3 years, guys. This is not AWS of fintech. No large deals are closing. They are not proving out the concept accordingly. Marketing is not doing a good job. I believe the Galileo technology platform is desperate right now. I mean, they might be, bringing on players right now, not charging them any revenue for a full year, continuing to show them, further products, no monetizations going down to our revenue or our bottom line. Something needs to be fixed, guys, but for 3 years of performance, this is not good at all, guys. This is very, very bad, especially when the last quarter we're at zero, no growth at all, complete standstill, okay? This is the exact opposite of what I thought was going to happen. I thought they were going to accelerate growth to $12, $13 million. Other people that cover SoFi on YouTube also thought the exact same thing, guys. This is a huge concern, and I believe this is why you're seeing institutional ownership finally, top out right there and pull back a little bit because they want to see more guidance. Yes, guys, there's deals closing, revenue streams are coming in, 2026, 2025. I'm just saying 2025 may be another sour year for investors. That's a possibility. Now, I also put this post out right here, and you can see I'm comparing, two other companies that, we cover time to time, specifically Hood, but, Palantir, I said Karp, the CEO, he opened up to retail investors with open arms, interviews, podcasts, photos, invites. Look how the stock performed, guys. The stock went from $7 over $100. No problem at all. You can see here we have Robinhood Vlad opened up to retail with open arms, interviews, podcasts, photos, invites. The stock went from $7 to $53. Okay. And you can see right here, SoFi, the management team. We got the SoFi Weekly, thousands of investors, watching that. We have, dozens and dozens of channels. And you can see when it comes to SoFi to retail, we won't communicate with you, no interviews, no invites, nothing, okay? And I know exactly why they are doing that, to be honest with you guys. The reason why they are doing that is because, they're a bank, regulations. There's always eyes watching over SoFi's shoulders, and they have to be very careful, with what goes out there because of regulations, deals closing, they're institutional investors with these, loan platform deals. It's just a tougher business, okay? And when you have the Galileo technology platform, which is supposed to be our tech hybrid multiple performing the way it is, it's just not a good time for, retail investors to be, interviewing, management and stuff like that, because what's going to likely happen is you're going to have smart guys, asking questions about what we're covering on this video, which is Galileo. That's what we want to know, right? And you guys can see that's exactly what's happening, guys. You can see data-driven investing right here is talking to, a Galileo team member in marketing. And he said, can you give us more details on what the path is from signing a deal until Galileo starts recognizing significant revenue? For example, why is it that even though the integration of the Direct Express deal is in 2025, that the financial impacts is in 2026? This is Scott T. Anderson. Hey, Chris, I'm unable to comment due to regulatory constraints. Stay tuned for more official updates. Do you think these guys are going to let us, come in, interview, have a party, earnings presentation, or anything like nothing like that can happen because we're in banking. There's just too much regulation. It sucks, but you guys can see what's going on behind the scenes. I ask a very simple question. How does Galileo accounts jump from 160 million to 168 million Q3 to Q4 and then revenue stays completely flat? Hi, Kyle. I'm unable to comment due to regulatory constraints. Stay tuned for more updates. This isn't really a serious question about insider trading or anything behind the scenes. Like, can we just know, like, what's going on with the business? Why is the business slowed to a complete zero, a brick wall? I mean, that is pretty bad for a $2 billion acquisition, right, guys? I mean, no growth quarter over quarter. This is a segment that was supposed to be the hybrid multiple, and it has literally came to nothing. A big fat zero, okay? I gave them a chance Q4, but now, guys, we need to be on management more than ever. I believe the other segments on SoFi is just absolutely carrying the weight. I mean, SoFi is growing extremely fast. They're probably going to put up 35% year-over-year growth this year. They just have an extremely large problem about, this entire business. 3 years is not a short time frame at all. This is a pretty solid time frame to have some performance. We've been stuck in the $300 million range for 3 years. Something needs to change. We need to know what's going on. We need to close a large top 10 whale, that's for sure. And this could get the stock, really moving up. And going back to that slide where you saw, the technology platform and the financial services platform, 54% year-over-year growth. These are the numbers behind the scenes. It's not really what you expect when you see the 54%. Look at this, guys. Financial services, 88% growth. Galileo, 12% growth. That is why they combine these two segments to mask the underperformance of Galileo. They don't give us any slides on the partners, diversified revenue stream, where the revenue is coming from. Everything is a black box right now, and I'm absolutely tired of it. And I hope you guys are also tired of it as well and, want to ask more questions. If you made it to the end of the video, I want to say I really do appreciate it. I hope you enjoyed this video. Once again, I'm going to keep you updated on all the breaking news with the SoFi stock. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. Hope you have a great day.